This is the briefing for Friday, June 28th. The intermarket divergences in the stock indices still exist, but it's almost like they reverse themselves every other day. This is a 60-minute chart of the spiders, the Qs, and the IWM representing the Russell. And you can see we had quite a reversal day today. You can see the opening hour, we basically were in rally mode, and it looked like we were going to continue to move higher, breaking through substantial resistance. But then selling came in the second hour, and the selling continued right through the end of the day, reaching a low of right around the 543 area in the spiders, but closing right about 544. In the Qs, a little bit different. We had an opening rally, then the sell-off for the rest of the day, but closed pretty close to the low of the day, right around the 478 area. But then again, in the Russell, this is where the intermarket divergences come in, is that the Russell closed almost higher for the day. Now you can see the opening here, and then of course the move back to the downside. But then we had a closing rally in the last hour of trading. The closing rally, this is probably about just 15 minutes of trading, but you can see the rally that occurred in the IWM representing the Russell that did not occur in the NASDAQ or in the spiders. So it's going to be interesting to see how these divergences are rectified. Also, the internals for the market are just really not that strong. They're just very weak. Now, this is market breadth for the S&P 500. So you can see we were only about 200 shares positive today at the high, and then of course it started to fall off once again and closed basically flat. In the same thing with the NASDAQ, we're at one point tonight at the open, we were about 1,000 shares positive and then closed only up about 294 shares. And in the Russell, we only closed up about 708 shares. So it's going to be interesting to see, once again, what happens at the beginning of the week with the intermarket divergences and with the internal divergences that are occurring. Now, the interesting thing is that we did have a reversal day today. You can see this in the spiders on a daily basis. You can see we tested this 550 area, came right up to it, and then the seller stepped in and absolutely knocked it back down again. Now, this area here is now becoming very important because you can see this for about 2 weeks or better. We've been rotating between 540 on the upside and about the 538 area on the downside. So breaking one of those areas is going to give us the next potentially intermediate term move in the indices, which should be a fairly good move. Now, this has been a very difficult time to trade, at least for me when I trade the indices, because you can see even on a daily basis, the range of the bars are just very, very low, not much extension except for today's trading and except for this day right here. So today's reversal, you can see the selling tail that came in today and drove price back down, closing pretty much at the 544 level. And of course, this 540 area is downside support. 538 to about 540 area is downside support. Breaking that's going to open up trading down to the 525 area, which is really important support because it is a breakout area of this area of rotation here, the pause that occurred around that, and then of course it appeared we're going to get a rotation back to the downside, and then we got this extension up. 52-week highs minus 52-week lows were basically flat. You can see breadth turned down in today's trading. Volume ticked up. So that's a result of the buying that came in at the beginning of the day and then the selling that came in the rest of the day that drove price down. So it's going to be interesting to see how we open up on Monday and to see if this 540 area is going to hold in the spiders. Now in the Qs, it's a little bit different. You can see we tested this. This is about the 587 area upside. You can see the rotation that occurred. We tested that area in today's trading, and of course then we had this selling tail that came in and closed basically below the low of yesterday. Volume ticked up, breadth turned down. So this was, and we have the selling tail here. This was really a pretty important reversal day, reversing away from the longer term upside resistance areas or the all-time highs. And in the Russell, once again, we now have moved away from this 200 area, which we were rotating around for quite some time. Now I changed the support level down to about the 197 area because this low now becomes more important than 200. Remember, the most recent information is the most relevant. So while 200 was basically goes all the way back to this area right here, now this 197 area is the more important area as well. And it's still kind of in the same area. It's 3 points difference from the 200 area. You can see the buying tail that came in. Then we had actually the selling tail that came in. Then we had this reversal that brought the IWM down lower, right around the 200 level, and then buyers came in and drove it back up. So it's really interesting to see what happened with the Russell in terms of the buyers that came back in towards the end of the day and stopped the slide, which did not necessarily occur in the other indices. Now you can see this is the Dow transports represented by the IYT. You can see they had a pretty good day today, and then the sell-off occurred, but they held. It did not retrace the whole rally that started at the beginning of the day. So the transports held, the Russell showing a little more strength than the other indices. So it's going to be interesting to see how the Russell and transports reconcile their divergences with the other indices and which one is correct. Now, looking at overbought and oversold, we are neutral. So this allows the market to go in either direction. It doesn't give us an indication as to overbought and oversold until we reach a point of being extremely overbought or extremely oversold. So this just basically tells us that the market is tightening and that potentially we could see a breakout move in the coming week. Looking at the percentage of stocks above their 50 and 200-day moving averages, you can see the decline. This is the S&P above the 50-day moving average, and this is the 200-day moving average. So you can see the trend of what's happening with the majority of stocks within the S&P is happening even though price is moving higher, once again being carried by potentially by the higher weighted stocks. Same thing with the 200-day moving average, and we're moving up even with the majority of stocks now beginning to trade below their 50 and 200-day moving averages. In the NASDAQ, you can see the same thing is happening here. This is a pretty good internal divergence between the 50-day moving average and the 200-day moving average, even though price is continuing to move higher. And finally, in the Russell, you can see the weakness in the Russell. Even though we got a tick up today, it stayed below trend or right at trend, and the same thing with the 200-day moving average. So basically, it's going to be really important to see what happens on Monday in that first hour of trading, because if we trade below the low of today and hold below that low, that's going to open up potentially trading down to 540. These are shorter term support levels, and they represent the longer term support levels as well. The 540 level in the spiders, the 470 area, 471 area in the Qs, and then of course we're looking at about the 199 to 200 level once again in the IWM. Very interesting to see how much volume came in, and of course that volume was selling volume but overcome by buying volume that drove this back up, and you can see in the spiders, not so much in the Qs, and a pretty good move in the Russell to drive price back up and stop the slide. So we still have a lot of buyers out there. It's interesting to find out that they did not defend this rally in today's trading. So it's going to be very, very interesting to see how we open up the week. But watch what happens at the important key reference areas, meaning the 550 area to the upside, the 540 area to the downside in the spiders, the 487 area in the Qs to the upside, 470 area to the downside in the Qs, and in the Russell we're looking at 205 down to about the 197 area, and that would open up in the Russell and the IWM trading up to about 210 if the high of today is broken, which is a very, very important key reference area in the Russell. And you can see the rotational pattern it has been in. This goes all the way back to December of 23. So a breakout here would be significant, although the market spends most of its time in rotation. So it would suggest the higher probability is if it can even get to 210, that we'll see another move back to the downside, just as happened here. Have a great weekend, and I will pick this back up on Monday.